in general, in emerging markets, it's been tough because of the COVID crisis, and I think Africa, which has proved to be more resilient in terms of reforms than other emerging market areas, I think, faces some challenges, particularly with respect to governance and rule of law in certain parts of the continent. But its track record in terms of hard-won reforms is actually quite good.
Let's look at sector appetite. What sectors do you think will be able to pick up as fast as possible, especially in the first half of the year?
Well, I think it depends obviously on the prices of commodities, obviously, which have been depressed because of the worldwide recession. But I also think in Africa, as manufacturing takes off and certainly more investment in technology sectors is happening, those also could be promising areas. And clearly what's needed on the continent where I think investor appetite is strong and should be stronger is in the infrastructure and logistics area, particularly as we enter into the Africa Free Trade Agreement. That's going to be a very important area for investors to look at, and I think the investor appetite there is actually quite strong, all other things equal, of course.
Let's look at a competitive advantage, and now that you bring in the FCFTA, how can countries or economies position themselves to be the landing ground for that investor money?
Well, I think first and foremost, what investors are looking at is how can they actually trade throughout the continent without all the current intra-continental trade barriers. And where they enter is obviously going to depend, as it does anywhere in the world, and particularly in emerging markets, is how sound is the governance framework. Because I think in certain parts of the continent, as in other parts of emerging market areas, where there is not strong governance and rule of law, foreign investors get quite scared, and they will choose safer havens to make their investments because these tend to be long-term investments. These are not portfolio investments, and they're looking for stability over the long term. And I think certain parts of the continent have proven to be more resilient in terms of stronger governance than other parts of the continent. So that's where they'll be scanning, I think.
You have many of, let's say, East African community countries. You have the likes of Kenya that is set to issue another Eurobond. You have so many of them all getting themselves ready to go out there by setting up bonds, the treasury bonds and T-bills. Is that the most safe instrument for investors at the moment?
Well, those are financial or portfolio investments. Those are very different than direct investments. I think, relative to other emerging markets, I think investors looking for portfolio investments will look at more of the countries on the continent which have stronger policy regimes in place. Certainly, Kenya is one of them, but there are other regimes on the continent where I think there is less strength and stability. But again, these are what you're mentioning are portfolio investments, and I think what is going to be most important, I think, in the long run in terms of Africa's growth is investments in plant and equipment and manufacturing, that is to say, foreign direct investment.
You have the likes of, nations, China, which played a very big role, especially in the last decade or two in terms of money pumped into the continent via various instruments, but also when it came to commodities. You had a pushback recently from some countries, Tanzania being one of them. The people of Malawi are also asking for a form of pushback. Where is China standing at the moment? And is it expected to continue on the same trajectory post-COVID-19?
I think so. I think the Chinese are still very interested in a lot of countries in Africa as they are in other emerging markets. But I think what is happening, which is all to the good for Africans, is there are new competitors coming in, or old competitors at least revving up their engine to come in to challenge China's investment and other emerging market companies' investments on the continent. And I think what is important for African leaders is to really foster that kind of competition among the foreign investors. And so I think policymakers would do well on the continent to diversify the sources of their foreign direct investment. The problem, of course, with China is they have been willing, up until recently, I think, to make loans, but that has also inflated the debt indebtedness on part of African countries. And so I think the question is, how can foreign investors come into the country but not pose the kind of risk that China has proposed and has engendered on the continent?
There's also the issue of diversification around African economies and African markets. You have the likes of Rwanda that went for a MICE strategy a few years back. That has been affected by COVID-19, but you see it putting its money somewhere else. Where should the governments, if they are to recover, where should they focus on attracting investment? What particular fields?
Well, I think the overarching goal should be stability and strength of governance in terms of rule of law, rather than picking particular sectors. I think first and foremost, apart from sectors, what foreign investors are looking for is, can I get my money out when I want to get out? And will I be able to sell the products I want to sell without too much regulatory burden? And I think what is happening, in certain countries on the continent where there are, upcoming elections, I think foreign investors are looking for where there will be an environment in which it really will pay off in the long run to make investments there. And I think, so as I say before, it's going to be a question of how can African leaders compete against one another to entice that investment. And that competition should play out in terms of which countries are ruled better and in a more transparent fashion than other countries, because foreign investors scan the African continent looking to place investments, and they will not invest where they suspect that there will be political shenanigans and weak governance.